Welcome to Invest. We talk about investing, finance, and professional. It's the current time of 8:12 a.m. on the Eastern Time on March 20th on Monday. Hope you guys had a good weekend and also happy Monday. Ethereum $100,779, about 0.37% so far. On the overall crypto market, we are normalizing back down from the previous level of surge that we have seen across, I would say, the last couple of days with respect to reaching to a level of 1850. But the level that we actually got to was 1818 at the highest. We did not actually get to the 1850, which is the next level of mountain peaks that we need to get to. And what's been fueling this whole, I guess it looks like a reversal, but it's actually just anti-correlation effects from the financial market. Basically, how would you even describe it? Explosion, cratering, falling apart, if you may, right? With respect to Central Bank, Silicon Valley Bank, First Republic, Credit Suisse, all at the verge of basically collapse, right? And if you look at the news front as of this morning, it's quite wide open, right? With respect to, well, I mean, the breaking news is that Starbucks CEO Laxman Narasimhan is stepping in 2 weeks earlier than expected. And I know that Laxman, he used to work in a company that is relatively famous, based out of India and also in European region as well. It's the holding company for the Durex condoms, obviously, but also other consumer retail goods, right? So it seems like he's taking over earlier. Maybe he just doesn't want to be waiting for retirement or whatever. He doesn't want to be just not working, which I can understand. Other news that is more prominent and front facing is with respect to FRB, First Republic Bank. It seems like the shares are slide 18% on this Monday after credit rating agencies have downgraded their financial exposure as a whole. And with respect to as you can see that Credit Suisse was purchased and acquired. Well, I would even say like just rescued by UBS, which is a Swiss bank, and obviously they have global presence for a relatively cheap price. With that being said, UBS the shares fell by 5%, while Credit Suisse cratered by 60% after the takeover deal. And across the spectrum, you could see that with respect to the news, these are quite I would say different flavors of what really happened with the financial sector as a whole. Is that UBS rescue of Credit Suisse doesn't resolve the U.S. banking crisis. Saudi National Bank lose $1 billion on the Credit Suisse investments initially. Seems like there's a blaming game going on. Jerome Powell has failed as a Federal Reserve chair, Elizabeth Warren said, because of what's going on with the financial sector right now. Exactly what we talked about in the last couple of days so far is that with respect to crypto market reversal, or the spark rally, mainly cultivated by the banking crisis that we're seeing, and so on and so forth, right? Most of these news are just regurgitation news talking about what's really happening. But with respect to this week, right, I know that in the middle of this week, we are going to have the FOMC meeting, talk about, the scenario for, what's the rate hike situation going forward on the 22nd? Are we going to go with 25 basis point? Are we going to go with 50 basis point? What are some of the, I guess, verbiage or tactical next steps Jerome will have for us with respect to all these banks just, seems like getting blown up right now. And, obviously it's hard for us to understand, like, now what, right? Like, you would think that banks are the safest spot for us to put our money in, but obviously, banks can also fall just as the least we could expect, right? So let's just dive into technical without wasting more time. Respect to recording time of 8:16 a.m. on the Eastern Time. We are relatively extended. You could see that on the technical front on the MACD, daily is quite extended, and RSI is also 63 out of 70. Weekly is also extended. So We are also at the 60 out of 70 on the RSI on a weekly perspective. So monthly, daily, and weekly. Daily and weekly are just, with the emphasis on daily and weekly are, quite extended. So buying around these levels is actually quite dangerous because of the fact that the risk versus reward ratio is just not worth it, right? And the pump that we're seeing right now is just basically people's betting on the financial sector falling further and further and further, and eventually blow up to the fact that crypto will just take over, because the mantra of crypto is the exact opposite of the banking system, right? Decentralized finance, right? And also on the Bitcoin side of the equation, we're at 28,000 green right now. But with respect to the daily, we're quite extended. Our size very extended, 73 out of 70. Weekly also. And then on the monthly, it's looking like it's not terrible, but still, would you be buying at this level when it's very high risk? And also the pump has been mainly driven by, obviously, the reverse effects from the banking system falling. So people are betting on the financial sector falling further, translating to the buying green candle that we see in front of us. And on the index front, on the pre-market, we are still digesting on what's really happening. We wouldn't really learn more until the market digests further on what's the next step. So UBS, seems like is part of Credit is part of UBS right now. Seems like First Republic is still in a dire situation, despite JP Morgan and Bank of America are in the rescue package. But ultimately, their debt exposure and also the lack of deposits, and banking system is all about reputation and trust. And with respect to what's going on right now, I just don't know how much of trust benchmark is there anymore. So it's quite difficult to, you would think that, oh, I put my money in the bank, it's a so I sleep well at night, but it seems like probably not anymore. Maybe take your money out of the bank and put it in the piggy bank under your bed or something like that might actually be more safe than actually put it in the safe or deposit safe in a bank. So anyways, but with respect to the equity market, you could see that we are still in the formation of this death cross. You could see that we're about to cross down, and then as we cross down, this will complete the revolutions of a cross up. So that means that the equity market should technically rebound later in the future. And on the monthly, same thing. We are looking to kind of glide and flatten up eventually. So it looks like we're still walking to the right direction on the technical front. See some sell off in the near term, and then rebound as we approach again Q2, Q3 from here. So appreciate you. Have a good day, and I'll check you on the next one. Take care. Bye.